Growthpoint's full-year distribution grew 6.1% to 139 cents per linked unit. The property group's linked unit price increased during the year from 18 Rand to 23 Rand, resulting in a 25.6% capital return. Growthpoint has a portfolio of 403 properties in South Africa and Australia. The share price closed up 0.5% to 26.55 Rand today. Now, for more, the group CEO Norbert Sass joins us in the studio. Norbert, your language is always slightly different to the other sectors. You talk about linked units and distribution, not headline earnings per share and things like that. So tell us why that number is pleasing and what it tells about the company's performance.
Sure, and I think as Mohammed said, for us it's all about yield. It's all about that distribution, growing that distribution and expressing that 139 cents as a percentage over the share price, for example. So yes, it's a pleasing result for us. It's pretty much in line with what we guided the market at the half year. The business today is, I think, in pretty good shape. If you look at all the key metrics that drive our business, vacancies came down from June 11 to June 12 from 5% to 4%. Our cost to income ratio is in check. In fact, came down a little bit to 24.3%. Our arrears, if you look at our total debtors book, I think this is a number which I often almost have to pinch myself and say, can this be real? 32 million on a business that turns over in excess of 4 billion a year in terms of rental charges to our tenants. A bad debt write-off below 8 million for the year. So our clients are all corporates. We don't really have the man in the street or as our tenants. So pretty healthy business. We've got 3 sectors in the South African business: so retail, office, and industrial, all performing pretty well. Office maybe a little bit under pressure relative to the other 2. The V&A Waterfront. This is the first year that we've included the V&A Waterfront results in our results for a full year. And then Australia. I did hear some comments earlier on Australia, and we've been very fortunate. Australia's been a phenomenal performer for us.
I suppose the question is how long can it last? Because the sector has done very well. There's been a lot of foreign interest in the sector, as there has been in our retail sector, and people keep saying it's overvalued, but it goes higher. And you look at Woolworths, for example, which keeps defying. I was at the IPD, the Investment Property Data Bank conference earlier in the year, and they said that the 2 cities that had given the best return on listed commercial property in the world last year were Johannesburg and Cape Town. Mm-hmm. Now, if that's true, how long can it last?
Look, I think it really does depend on your outlook for rates and for interest rates. Because we're a yield play, we're very much driven, and our share price is very much driven by bond rates and the outlook for bond rates. So bond rates have obviously, they're at all-time record lows. They continue to come lower. What's your view? Is your view for bond rates to stay lower for longer? I think that's more or less our view and more or less consensus, I would think. And if that is the case, then certainly the outlook is that the prices can. I don't think they can run another 30%. If you said to me last year this time, that Growthpoint would be doing 32% total return to shareholders, I would have said, no, it's not possible. But it's been off the re-rating of bonds. Now, can bonds go even lower is the ultimate question. And it's not impossible, but it would be very hard to do another 30%, I would guess.
I think, the burning question for me almost links to that. You've been the beneficiary of almost the perfect storm. We've seen those bond yields really come all the way down. And property stocks are nice because they give you earnings growth come through there. And then, also just on the share price move, you've seen that being fantastic over the last year, potentially one of the best performing asset classes. So you've been the beneficiary of this perfect storm. Where does that turn? Surely the cycles coming through, the economic pressures coming through as well. Where are you going to start seeing those cracks appear? In your various sectors, you already say office, potentially there's a little bit of pressure coming through there. But what's the straw that breaks the camel's back in your view, given your particular focus?
Which is another way of saying what keeps you awake at night.
What keeps you awake at night?
Look, I sleep very well. So there's nothing really on the fundamentals of the business that keeps me awake. Now, the fundamentals are very good. As I said, vacancies are in check, costs are in check, the arrears are in check. Our funding, our access to liquidity is phenomenal. I think we're fortunate in South Africa in the listed property space that we've got incredible access to liquidity, both in terms of equity capital and also debt capital from the banks. The banks are willing to lend. The debt capital market in South Africa is hungry for diversification, wants property and property exposure in the bond market. So we're very, very fortunate there. can the fundamentals, what can happen on the fundamentals? If we go into recession big time, depending what happens globally, the impact, we did go into recession in 08, 09, let's say 09, our vacancies doubled. They went from 4% to 8%. They back down to 4%. But that didn't. We still grew our distributions, notwithstanding that our distributions kept growing, because we've got these lease structures whereby we have embedded annual escalations of circa 8% in our leases. So 80% of our book, 85% of our book of leases grows at 8%.
No concerns about potentials of bubbles in Australia in particular?
Not at all. I think our Australian business is again, it's a very small, niche little business. We've diversified it away from being a pure industrial fund to now include some office exposures. Our vacancy there for the last 3 years has been 0. So yeah, it can go up, but is it going to go to 20%? My guess is no.